Hello, everyone. Welcome to today's episode of Let's Talk Wealth, powered by the GOAT Investing. I am Praveen, your host for today, and we have two incredible voices today joining us, Mr. Sachin and Mr. Lakka. Hello, Mr. Sachin.
Hello, Praveen. Thanks for hosting this. And hi, everyone. I'm very much excited to be here. Today, we are going to break down not just how investing works, but how to do it in a way that actually helps you build real wealth. Hey, Mr.
Sure.
Lakka, do you want to continue?
Yep, sure. Thanks, Sachin. Thanks, Praveen, for arranging this call. Hello, everyone. Yeah, I think we should begin with most important question. Everyone needs to ask themselves, why do you even want to invest in the stock market?
Yeah, that's a great starting point, Mr. Lakka. Thanks for bringing that up. So, just to start that answer, I think you have everything listed on your slide, which comes to my mind actually. Most of the people who come to stock market, I think they just want to get rich quick, because those are the narratives we hear quite often in the society. A lot of them come here for the dose of adrenaline by doing day tradings. Some of them come for really building wealth over the period of time, which is usually very slow. And very few of them actually aspire for confident and peaceful journey, which is free of any stress.
Yeah, agreed. But here, right, let's be real too. Like most of the people starts when the market is at hype, right? But they stay for long term only if they see consistent and stress-free growth.
That's right. And I think achieving consistency is really, a tough job, right? Because uh, very often a lot of people don't have their well-defined strategies available, and then maintaining consistency with random rules or gut feeling is really difficult. And then even if you have well-defined strategies, markets are going to challenge that every day, right? So
Exactly,
how?
Praveen. Uh,
Mhm.
yeah, I mean, most new investors, like they get caught up into, I would say, quote unquote, get rich quick narrative,
Yeah.
right? That's how people end up falling into the FNO trap, right? Thinking they are trading, but I really feel like they are actually gambling.
Yes.
Yes, Mr. Laka, you're very much on spot on, right? Like that's why at GoTo Investing, we keep emphasizing on systematic and emotionless process. It might not be flashy, but it does work. And more importantly, right, it lets you sleep peacefully.
Yeah, and peace of the mind is the real asset, right? Imagine if you are investing into the market and then it is taking away your peaceful sleep at night. It's of no use. And then we have seen a lot of people doing it wrong, right? Getting rid of such anxiety of investments. um, what are the common options a retail investor has to achieve a peaceful investment journey, which will also build wealth for them over the period of time? So it's really a curious question that one should ask, right? What are the options for retail investors?
Yeah, as listed here, right, the very first and very well-known option is mutual fund. It's a great tool for disciplined investing. But you know what? With mutual fund, you are giving full control to the fund manager. You don't decide when to buy or when to sell, and for that matter, what to buy as well, right? Also, there are too many options available in the industry,
Hmm.
which basically leads to the confusion rather than clarity on which one to choose.
Yes.
Yes, and then there is the other one, that's index investing, right? Like it's a low cost, easy to manage. You get the market average returns,
Hmm.
right? This particular index investing, it's really great for the beginners, or the passive investors, right? So who are happy with average return on investment, and they don't want to take any high risk, right? I mean, that's what I feel like index investing is best for them.
Yes, that's true. And yeah, and as you have listed here, right, nowadays we also see a lot of investment advisory firms out there, the portfolio management organizations, which provide portfolio management services at some fees. Um, and I think the GOAT investing is one of them.
Yes, Praveen. So basically, with this active investing, right, what's the main benefit? The main benefit is you stay in full control of what you buy and what you sell. And at the same time, you get the expert help as well. It's
Hmm.
like driving your own car, but with the Google Map guidance. It just makes journey very peaceful, and it makes sure that you reach to your destination hassle-free in expected time.
That's such a good analogy, Sachin. Honestly, I feel like that's a mix of control plus it also gives experts insight is what most people need in this case.
Yes, that's right. So, even with investment advisory firms, right, what are the different investing styles usually followed in the market? Could you, both of you, please bring some light to that?
Yeah, I can start on that. Yeah. So basically, you got a couple of different investing styles. One of them is value investing, where we find the undervalued companies and invest in them. So the great Mr. Buffett follows the same style of investing.
Mm-hmm.
But you know what? With this value investing, basically, since we are finding the very undervalued companies, it might take time for market to realize its true value, right? So
Yep.
that's basically pushes us to have a lot of patience, and sometimes the market may take years to catch on, right? So it is a good strategy, and a lot of folks follow value investing. But personally, I feel that it needs a lot of patience and time to actually see the fruits of the investing style.
Right. And then there is a growth investing too, right? So, I mean, what it is basically, betting on the fast growing companies, right? But it also comes with a risk, and the risk is valuations of those companies or such stocks could be sky high.
Correct. And then there is a factor investing, which is more rule based, where you design a strategy based on certain rules,
Mm-hmm.
which chase down the factors like volatility, size, and there are a lot of other quantifiable factors based on which a theme or a strategy is designed. And then the investor invests according to those rules.
And then I see momentum investing here. It's a buzzing word nowadays. We see a lot of people talking about momentum investing, which brings the flavors of value investing, growth investing, factor investing. And I know that the strategies that GOAT Investing provides to retail investors are mainly based on the momentum investing style of the investments.
Right.
So, uh, we would definitely like to understand what is momentum investing. But before we go there, right, I have a question for both of you. What are the common expectations that you hear about from retail investors who are your subscribers?
That's a very good question, Praveen. So, for a retail investor, right, the most common expectation is the stock price should increase
Mm-hmm.
as soon as they buy a stock,
Mm-hmm.
right? They like to see their investments growing faster,
Mm-hmm.
and they like to see the profits in very short period of time. So generally, the retail investor is not happy if they see the losses on their portfolio. So the common expectation is I buy a stock today, and starting tomorrow it should run and give me profits.
Mm-hmm.
Yes, I totally agree, Sachin. Momentum investing, I mean, it also has, high chances of meeting these expectations, right? And as it is based on the concept of the stocks that have been doing well, right? And we anticipate, those stocks will also have high probability of continue doing well in the future as well.
So I think achieving that, right, achieving increase in the stock price in shorter time frame is really a tough job. But looking at the price momentum for on the stocks, usually price movement is brought by bigger institutions, if I'm not wrong. Retail investors very seldom bring a big price movement into the stock's price. So can we say that when the price movement is happening, uh, big institutions are entering into the stock? and then there is a massive demand created by bigger institutions, which is usually backed by a very detailed analysis, and it's not just a fluke. Would you like to bring some
Correct.
help light to this, Mr. Sachin?
Yeah. So basically, when big institutes buy, right, like they have a big fund and they manage money of large pension funds and then high net worth individuals. So when these big institutions buy any particular stock, you see the footprints of them in the form of price momentum, because since they need to buy in bulk and quantity, they create that price momentum in a stock price. And that's what the momentum investing is all about: observing those footprints and understanding the price momentum and investing in such stocks.
So, what is the edge that is provided by momentum investing over other investing styles? Would you
Yeah.
be able to help us understand that bit?
Yes, before moving to the edge, right? Let's whatever we talked about, the price momentum works in the stock market. It's not just a theory. It's basically backed by data. There are multiple scientific research papers
Mm-hmm.
published showing that the momentum can boost your portfolio return.
Mm-hmm.
Momentum strategies may face some crashes or drawdowns, uh, but you know what? A well risk managed momentum significantly improves the risk adjusted returns. That has been proven through these scientific research papers. They are available online. There was one well known research paper which showed that stock that have performed well in a period of 3 to 12 months tend to continue performing well in the subsequent following 3 to 12 months as well. So these papers are freely available on the internet. People can go and read those to get some more clarity and comfort around the momentum investing.
Yeah, that's good to
So
know. So I see that it's not just investing in the hype, and basically it's a scientific approach towards building wealth.
absolutely. Now coming back to your question of inherent edge, right? The first edge in the momentum style investing is you are not randomly chasing any hype. You are following the price caused by smart money. Like I explained, right? When a big institution buy, they leave a footprint. Their buying causes the stock price to increase and continue their upward journey.
And then how investors are protected when the market falls or the price momentum goes away? How does that work in momentum investing?
Right. A good question, right? Like on the flip side, when the momentum fades and a stock starts falling, a well-structured momentum strategy cuts it out quickly, protecting the downside and the loss on the portfolio. So that is also one more characteristic of the momentum investing, which basically cuts the losses early.
So basically, that's like emotionless investing, right? It is rules based, so uh, investors are not tangled because they are emotionally stuck to any particular stock.
Correct.
Okay, so yeah, so now we come to the point that if somebody or a retail investor wants to practice momentum, how do they build strategies having momentum as core principle?
Correct. Like I said, right, the momentum is observed in the stock price, correct? So definitely the returns on the portfolio are the product of the momentum itself. Unless the price increase,
Hmm.
no one is going to see the return on their portfolio.
That's right.
And also, loss is well controlled in the momentum strategies. Uh, Recovery is very fast, because let's say if your portfolio starts seeing drawdown and losses, if you control your loss at early stage, it helps in overall portfolio recovery when the momentum again picks up, right? And with the momentum strategies, the execution is like a autopilot, right? It's like you are operating a machine where a set of steps are listed. You
Hmm.
just have to follow those steps to operate the machine, and then
Hmm.
the output will be produced. So I'll take one example where anyone can build a portfolio around the momentum investing, right? So what they can do is, let's say I have to build a portfolio of 15 stocks, right? So my rule could be as simple as I'll buy the stock which is
Mm-hmm.
hitting all-time high price, and I'll keep holding those stock in my yeah, that stock in my portfolio until it closes below the 50-day moving average. So
Okay.
that could be a very simple strategy or a rule book which one can follow and build the 15 stock portfolio for their investments. Now, these rules and then basically logics, there are hundred of parameters which one can use. Someone can follow the moving average, someone can follow the RSI, but we need to find out those momentum indicators like moving average, RSI, or chasing the price like 52-week high, all-time high, right? And
Mm-hmm.
continue holding those stocks until the momentum is there in that particular stock. As soon as the momentum fades away, we have to exit that stock. And how to gauge that? One of the example which I explain is if the stock price closes below 50-day moving average, we can, like the rule says, that exit the stock, right? Now, these are all just examples. I'm giving an idea how one can think while building the portfolio around the momentum strategy, right?
Mm-hmm.
Doesn't guarantee that if someone follows this rule, they're going to end up making money. But I'm giving an idea about the momentum indicators or rules which one can create and backtest their strategy. That's why at Goat Investing, right, we have a lot of products which we have built around very complex rules. We have back tested the data. So if one is capable of doing this, definitely they can give it a shot.
Excellent. This is what I was looking for our retail investors. So basically, what I understand is momentum investing styles have a very well defined entry criteria. They have very well defined rules of exit, which manage their risk professionally. So, with this background, we would definitely like to understand what are the different products offered by Goat Investing.
Correct. So as we already explained that at TGI, right, or Goat Investing, we offer momentum investing based portfolio solutions. The core expertise of ours are risk management is our top priority.
Mm-hmm.
We don't like our portfolio bleeding too much in the losses because, as I mentioned, if you let your portfolio go in deep losses or drawdown, recovery is very difficult. So
Right.
risk management is top priority. We pick up high quality momentum picks based on our rules and
Mm-hmm.
criterias.
Mm-hmm.
And our aim is to build the portfolio and earn the returns, outperforming the benchmark returns. So each of our product have or has the underlying benchmark which it follows. And our goal is to always keep beating the benchmark returns. With that, I'll go to the products which we offer. So the first is TGI Grow Free,
Mm-hmm.
which is completely free product for everyone. This product is based off of large cap companies.
Mm-hmm.
We basically invest in stocks from the Nifty 50 index. Then the next one are TGI Express and TGI Elite. These two products are based on multi-cap investing, where we invest in stocks from the universe of Nifty 500.
Mm-hmm.
Basically, these two products are great for someone who needs more diversification across the basically market capitals, right? Like large cap. It's a blend of large cap, mid cap, and small cap.
Okay.
Yeah. And then, Praveen, we also have got, the other two products. One is TGI Mini Gems, right? So that's our small cap focus product, investing in Nifty small cap 250 stocks, right? So those who have the higher risk appetite, so it's for them, right? So a higher risk comes with a high reward, right? The next one we have is TGI Orbiter, uh, which is again it's a large cap strategy
Mm-hmm.
for someone who wants the steady movers, right? Less volatility, This product invests in Nifty Next 50 stocks.
Nice. Thanks for the overview. Most of your products, I feel, are not the products which will predict the movement, but it will just follow the trend and help retail investors grow their capital. Is that right?
That's absolutely right, Praveen. So if someone, right, who is tired of guesswork and the market noise, and if someone wants to invest in products that works even when the emotion don't, then that definitely they need to check out us. We have a website, www.thegoatinvesting.com, or they can definitely shoot us an email at support@thegoatinvesting.com if they have any questions.
So, to all my retail investors who are listening to this show, if you are already investing into the market, or you are just exploring from some advisory services, or you are already using some, you can always check the Goat Investing products by visiting their website, as mentioned on the screen. It is free. The TGI Go free services are free, so you can just subscribe to their free product and start observing how the strategies work over the period of time. It's a great opportunity for retail investors to learn more about momentum investing. So thank you so much, Mr. Sachin and Mr. Lakka, for joining us today. We had great insights from you learning about momentum investing.
Yeah, thank you, Praveen. Thank you so much for giving us an opportunity to convey our message.
Sure.
Thanks, Praveen, and I wish the happy investing for all the investors.
If you like our videos, please give us thumbs up. Subscribe to our channel for more such content. And if you have anyone who can be benefited from this video, please do share. Until next time, invest smart, stay consistent, and stay healthy.